Ladies and gentlemen, there are more bad news emerging about the Singapore economy. And I think it's very important for us to take a look at what are these news. And more importantly, is to see what are our reactions to all this and what we can do to plan to take advantage of all this. And please watch to the end as I give you some of my suggested answers to these questions. So Singapore economy is currently looking not very good. In fact, it's very gloomy. And my usual disclaimer is that this is not for you to react anything in the stock market, for education and entertainment. So let's go. So the economists are predicting that the growth forecast will now be 1.7% on geopolitical and trade tension. So things are not looking good. You just look at what's happening on the area of trade war and the real war that are all happening right now. So the economists in MAS survey cited geopolitical and trade tension as the foremost downside risk to Singapore outlook, followed by a threat of a global slowdown. They also flagged tighter financial conditions, which usually refers to higher borrowing costs and financial market volatility. The private sector economies lowered their growth forecast to 1.7%, and this is a downgrade from the previous 2.6%. So you can see that things are not looking good, and this is a sharp drop from the 4.4% growth that was clocked last year, and they are not looking good also for the next year as well. So they are all predicting that 2026 will be stuck at 1.7%, no meaningful economic rebound next year. And this survey was actually done on May the 22nd, and after US and China struck a preliminary deal on May the 12th. So there's already factored in all the so-called minor good news already. So the only good thing is that they also factor in that this trade tension based on tariff war is not as serious as originally thought. So all the potential upside already been captured in. Now, they clearly has highlighted that Singapore externally facing economy face heightened insecurity and downside risk from the tariff chaos. And fortunately, right now, the China economy and the US economy, two of our largest trade partners, are seeing somewhat less than bad news. So hopefully there will be a sustained global upturn in demand for electronic goods, and this will help to cushion some of the effect. So this news is not just unique to Singapore. We also see this across ASEAN as well. So Singapore, Thailand, and some other countries may see negative growth by 2026 as ASEAN reels from the tariff, according to economists. Caught by the economic power of US and China, the region must find opportunity beyond China plus one strategy. Right now, a lot of the ASEAN countries are benefiting from a China plus one, meaning that China knew that there's going to be a lot of trade restriction imposed on them. They branch out to other countries like Vietnam, Malaysia, and all this, and even Singapore. And then from this country, they springboard to US. But now the US is closing this loophole. So this strategy of China plus one is no longer that big an opportunity. So the full impact of escalating US tariff on ASEAN growth will likely emerge in 2026, where the region is expected to face a sharp slowdown. Bloomberg Economics projected on Tuesday that the GDP growth across ASEAN 5 economies, namely Singapore, Malaysia, Philippines, Vietnam, and Indonesia, is expected to fall from 4.5% to 3%. That's 1.5% fall. And the research unit added that the growth could even fade to 1.5% in 2026 if the tariff stays in place. So potentially next year, we're looking at 3% across ASEAN, and it could even go down to 1.5. Now, you take note, 1.5 will probably means that some countries is higher than 3, then 1.5, maybe 3%. Some countries will be lower, averaging 1.5%. Singapore, given that we are the most mature economy across all the regions, we'll probably be registering the most lowest growth. So Singapore exports unexpectedly fall 3.5% in May from same month a year ago, shows government data. And that's quite serious. The fall compares to a Reuters poll forecast of 8% year growth year on year. And this was also followed by a 12.4% rise in April. So you can see that right now we are feeling the impact of the trade war. Meanwhile, on inflation, the current estimate for inflation is 0.9%, down from the 1.7% in the March survey. The median forecast for MAS core inflation, which exclude private transportation accommodation, was 0.8%, was also lower than the 1.5% in previous survey. I've said before, a low inflation rate or even deflation rate is very bad for the economy. A lot of people just cannot register that. When we have a inflation rate of suppose 1.5 to 2 or 2.5%, it ain't that bad. Prices are increasing because there's robust demand for goods and services. But if there's disinflation of a significant level, it basically means that people are not buying. And as a result, the sellers have to cut prices to stimulate the economy and things like stimulate their sales. And as a result, this basically is a reflection of poor economic outlook. So a lot of people say, Mr. Lu, how can it be? The STI index shows a phenomenal increase for the whole of 1 year from a low of 3,200 all the way to 3,900. Well, the stock market is not necessarily a good predictor of the performance of the economy because this is a collection of about 30 over companies. And the 30 over companies go up for different reasons. For example, right, the three banks went up a lot largely because the interest rate was high and they were doing well riding on the interest rate gains. Singapore Telecoms was doing very good because the CEO pursued a strategy of realizing hidden asset value and things like that, right? So companies go up in not necessarily because of economic upswing or downswing, but that's why the STI index right now is performing reasonably well for this year. I would like to stress that the outlook economy may not be reflected in the STI index, and also like to remind everybody that there were times when our Singapore economy were doing very well for the last 17 years, and the STI index was languishing around 3,000 points and so on. Okay, so before we think that STI is doing very well, it has just recovered from a 17-year low or something like that. So it last registered a high of 3,800 points in 2007. So it waited until this year, then it recovered. So a 17-year drought, that's how bad it is. And I would like to stress that it's really very difficult for fresh graduate and even people who are looking for a job right now. So the economists currently are expecting unemployment rate to edge up. And the unemployment rate is currently low, but is expected to go up slightly. But I think in the youth unemployment or the graduates, the new graduates unemployment is set to go up. Anecdotally, I know that quite a few of my niece and nephews are finding a lot of difficulty in finding a good job. And I even have to take one of them in one of my company after the person cannot find a job for a prolonged period of time. So this is a time that you shouldn't be picky and you should take something that comes along, build some resume first, and then as the time gets better, you pick something that you do well. So a news article came out and just said, forget gap year. Singapore fresh graduates are prioritizing job hunt amidst market uncertainty. It is a very popular thing in the past to have gap year where people graduate and don't work for 1 year, go travel the world, go do something that they like whatsoever. Now they are very realistic. Okay, graduate quickly, grab anything that comes along first. Okay, now the market will not be waiting for you for you to get a job. Yeah, right now it's the employers are all taking a more conservative stance right now of freezing hiring and not even hiring, maybe even cut jobs. Forget about taking a gap year or going for a grand graduate trip. Job security is weighing on the minds of many young graduates who are entering a job market scarred by trade war. Okay, and DPM Gan Kim Yong, Minister Tan See Leng, and National Development Minister Chee Yong Tat have each taken different occasion to caution and warn fresh graduate about the challenging hiring outlook. So DPM actually warned everybody to stay open-minded about different job roles and salary expectation. Do not take your time and be 挑三挑四 do very picky to go find a job. Now is the time, grab everything that comes along first. Job posting has gone down, and number of applicants per posting has also increased. So it is currently difficult for many businesses to plan ahead, potentially impacting job creation since business leaders don't know what trading environment will look like in future, given the uncertainties that are happening in the market right now. So we have got a lot of trade wars are happening. Nothing has come to a landing yet. And even if it come to a landing, it's only for 3 months, 6 months, and whatever. And there are real wars that are going now on a very large scale. We have got Ukraine-Russian war, you got Middle East war, and so on. Middle East war got many different fronts and things like that. So things are not looking very good. So I think it is the current state of businesses right now to be more conservative. Property market, the new private home sale was the lowest for 2024, although it was up quite significantly year on year. But there is somewhat a slowdown. And I think it's also quite important for us to be cognizant that things are potentially taking a slowdown as well in the property sector. So this is my experience having gone through life and businesses, my professional life and things like that. My current experience tells me that the B2C businesses are slowing down quite significantly. Many of the businesses I speak to, and I'm speaking more to them as well. The general feedback for me right now is that the B2C businesses are registering some slowdown. The B2B business is probably the next wave to come. So even businesses that are B2B to C are also registering a slowdown as well. Hiring is very conservative right now. I don't think people are firing, but right now I think a lot of the company has frozen hiring or hiring very little or very careful with hiring. And everybody is conserving cash right now, and cash is king, And this is something that businesses are very careful and cognizant right now. So my key takeaway from all these things that are happening, I would like to say that the world right now that we are seeing is very messy. It's not catastrophic. I've seen catastrophic economic environment before. 2007, 2008 was catastrophic, And 2022 was actually quite bad as well. Right now, I use the word messy. It's sometimes up, sometimes down, a lot of times uncertain, sometimes good, sometimes bad, whatever. It's just messy. And it's messy not just economically and politically as well, right? It's just chaos after chaos after chaos in the area of politics, in the area of war and things like that. This kind of environment does not facilitate the overall economy to do well. There are some businesses that thrive in this kind of environment, but just not the general economy. So I will foresee that in the short to mid-term, the businesses can't do very well, and we should take a more conservative stance. Now, amidst all this, long-term investors like myself, who are invested in globally diversified index, I would say that the S&P 500, NASDAQ, MSCI World Index or whatever have survived through bigger storm, And they have survived through last 50 to 100 years in more catastrophic environment. So we need to take faith that yes, environment is very fluid right now, uncertain. We sometimes need to look away. Sometimes we just need to watch it with an eye of entertainment rather than get emotionally dragged down. So just as the market has shown right now, the market is very resilient to all these things that are happening, and we should be economically ready for a rainy day. Conserve enough cash. Don't be too gung-ho. Take a shorter holiday or take a nearer holiday, as I see already happening right now. As I just came back from Europe, there's suddenly a lot lesser Singaporeans this time, and I think that in places like Thailand, Korea, Vietnam, Malaysia, we see a lot more Singaporeans. Okay, so what do you think? Do you share the same sentiment that you see some level of gloomy environment as I do? Please let me know in comments. Tonight I will have a 11 p.m. live stream. I do have an interesting topic I want to cover on top of what I will cover in giving everybody an update of what's happening today in the geopolitical space in Middle East. So tonight I will cover one very interesting question that came to me from a community member. So someone wrote to me and just said, Mr. Lu, just curious how to attain high position in a corporate company. What kind of skills are important? Thinking that I could level up the skills by taking more courses. Is it an MBA? And with AI advances, what skill is more important? Okay. So I say I'll do a live stream tonight and discuss this question. I think it's a very good question. So join me tonight at 11 p.m. and I'll see you when my live stream starts. Okay. Thank you and have a good night.